Hey everyone, welcome back. Today we're going to talk about how to pick the best market for your real estate investment. Let's jump in. Location, 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 right? Well, it's a little cheesy, but it's true. Real estate is all about location. You want to be in the best spot available when you make your real estate investing choice. It applies to commercial real estate just like it applies to residential real estate. Just like you don't want to buy a house next to the railroad tracks or maybe next to that industrial park, same thing goes with the commercial real estate, especially apartments. You want to buy where people want to live. Most people are not really paying attention to this stuff when they're looking at deals. They just say, oh, that's a good deal. So the next thing they do is they go type in the location. And we're doing the opposite. We're looking for the best pieces of real estate in the best market. Now, that's a hard thing to do because you got to be very patient and very particular about what you want. Next, let's talk about population. First thing we look at is population. We want to see and invest in markets where population's growing. We got to be at least 100,000 people in the MSA, which is the Metropolitan Statistical Area. Markets this size are less likely to be dominated by one industry or one job creator. They're more likely to have professional property managers and staff to help keep up the property. Some people think that, oh, I just found this one perfect property manager. Well, what happens if that property manager relationship doesn't work out? You have to fire that person. Who's going to take that job? So you got to have a good deep bench of people to pull from, especially in the maintenance part. We also want to see steady population grow. Say we're looking at Flint, Michigan. There are about 100,000 people there. So that fits our criteria of 100,000 people. But I think about 20 years ago, it had 150,000 people. That's trending downward, and that's definitely not someplace you want to invest. We look for growth around 1, maybe 2%. If it hits 3%, hey, we're doing a happy dance and everything's good. Of that growth, we want to see net positive migration and household formation. If people are moving in as opposed to families simply growing, that means parties are applying to rent, not just larger parties are applying. That's super important, and a lot of people are missing that right now. A lot of apartment syndicators just see, population growing, they think everything's good. No, we want to see large parties applying less and just more people applying more. This is something that a lot of syndicators are missing these days when talking about growth. It's easy to look up this data through the Census Bureau. They provide data down to the zip code. So if you're looking through an MSA, you should be able to find that no problem. Moving on, next, we're going to talk about jobs. If you're moving to a market, that's great, but they also have to be able to afford the rent. Denver is growing right now like crazy. Our unemployment is super low, but the affordability index is one of the worst in the country, if not the worst. So having a job, having jobs come to the area is great, but you still want to have that affordability. Since the Great Recession of 2008, there's been a lot of talk about unemployment and how great it is. I actually look at the labor force participation rate, which I think is more important. The unemployment rate ignores people who have given up looking for a job. It's something really popular in political speak is, oh, unemployment's super low. Well, labor force participation is more important because if people are just dropping out because they can't find a job or they've given up or the social services programs keep them off, that's something I really need to look at. In terms of an individual market, we want a labor force participation rate to be at or above the national average. We also want it to have a steady growth that's been growing somewhere around 1 to 2% over the last couple of years. While labor force participation rate as a whole is improving, there are areas that are going down and there are areas that are going up. So you got to be really specific about the market that you're looking at. We want to be in areas where employers are moving in and investing in the area. That's really important. For example, on a most recent property that we closed on, a large grocery supply chain, basically. For example, on a recent deal we closed, a major grocery chain announced that at their distribution plant, which was like $1 billion distribution plant, they were adding 400 additional jobs. That's huge for labor force. And that was minutes from our property. That's a really good sign. And we want to see people investing in the area that you're buying in. It just shows that they're going to be more invested and to stay there long term, to keep their employees happy. That's something you really want to look for. We're also going to talk about landlord and tenant laws. This is something that I have a special place in my heart for because of my background as a lobbyist. It goes without saying that the likelihood of tenants able to pay rent is critical to your property's success. If a tenant decides to quit paying rent, we want to be able to remove them via an eviction as quickly as we can. We got to get that property back up and generating income so that we don't lose our footing. In California, that's almost impossible to do in under 6 months. But in the areas that we look in, it's possible within 30 to 45 days. That's pretty standard in landlord-friendly states. So we want to get that apartment unit back up and generating money as quickly as we can. Areas with unfavorable landlord-tenant laws, they're uncoincidentally some of the worst and most expensive markets and the highest taxation markets. So in general, I avoid those areas because we are high yield investors. A lot of people talk about underwriting for 5-year holds. Are you underwriting a political hold for 5 years? You want to make sure that you know the political trajectory of the state that you're investing in. Finally, we're going to talk about absorption rates and vacancy rent and affordability. Vacancy refers to the percentage of available units that are able to be occupied. Obviously, anyone investing in a market wants low vacancy. You want low amount of units available because supply and demand will push your rents up further. Absorption refers to the number of available rentals that were occupied over a given period. The inverse of vacancy, you could say. It points to how strong demand for rentals are in that market. If absorption is high, that means people are filling vacant units. We want that. Now, the affordability, that's more of a macroeconomic measure. It's gotten a lot of attention over the last years because of price inflation, and especially those markets like, again, I hate to keep picking on Denver, but affordability is huge. People need to be able to afford their rent. Now, some people will say, oh, we got to stick to maybe 33% of what their take-home pay is. You want to target that for rent. I want to go lower. I want to go 15% because you want the availability to raise those rents. You want that that buffer there. You don't want your tenants to be price sensitive if you raise your rents $25. You want them to just say, well, that's the cost of living here. We're just going to go with it. You want good, strong affordability in your market. And just to close out, finding the right market is crucial to making sure your investment's right. There's a lot of data that you got to pour over. I've poured over this data for hours. It's really critical that you get that data right on the front end so that you're set up for success. And all you have to worry about is following the business plan and making sure your management company knows what it's doing. You don't want to have to worry about economic issues that you can't control because that's going to sink your deal quick too. Ensuring the legwork is done before you step foot into a market is what you can expect when you're investing with us at Bannock Capital. It goes without saying that this is our life. This is something that we've really dived into and really understand well so that our investors don't have to. That's all I got for you today. Thanks.